Hey, what's up, guys? My name is Landon Poindexter, and today I'm going to be going over a cryptocurrency strategy for you. Um, so you can make a little bit of profit whenever you feel like day trading. This is a very simple strategy, and it's basically just supply and demand. So I'm going to go over a little bit of what supply and demand is, what time frame you should be using fair value gaps to identify the best supply and demand zones and how to actually execute the trade. So let's get into it. And before we get into it, this strategy works on every pair, stocks, everything. We're basically just trading with the banks, the big money movers in the market. All right. So what we're looking for is a trending market. You don't really want to use this when the market is moving sideways in consolidation, such as this. Why is this not working? This is consolidation. Let me get the right tool. I'm sorry. This is what consolidation looks like. Up, down, up, down, up, down, up, down. All right. It's not what we want to be using this strategy for. We want to use this strategy for when we have lower low, lower high, lower low, lower high, lower low. We have something trending in the market, or higher high, higher low, higher high, higher low. We let us know that the market is moving in a specific trend. Anyways, as we can see, we're going to move the drawing so we don't clog the chart up. You never want to clog your charts up. All right. We can see we're in a downtrend because we are making lower low, lower high, lower low. Not really a lower high, but we did make another lower low because we're breaking the lower lows and making new ones. All right. So we know we're in a downtrend right here. All right. So we're looking for big movements in the market, such as these. Huge movement. Oh my gosh, this tool. Let me use a different tool. All right. Huge movement. Huge push. We're looking for those movements when we are looking for a supply and demand zone. And this can either be if we're looking to buy or sell, but in this example, we are looking for sells because the market is going down. We're going to trade with the trend. All right, so let's erase the drawings. All right, so we can see big pushes, big pushes, big pushes. This lets us know big money is in the market and it is going to have a lot of control on where the market's actually going. So we want to trade with the people that can able to move the market, right? All right, so we want to look for very strong momentum candles as well. This is kind of strong, but you can see there's a little bit of bullish candles here and indecisive candles. This is a very strong one right here. A lot of downward momentum, very strong right here. All right, so we can go ahead and take our box tool and draw out the supply zones. These are supply zones. So you want to, when you're drawing these out, you want to draw out the first couple candles, a box from the first couple candles that started the movement down. And then I will label this for you. All right. These are the supply zone. You can see there's another one right here. First couple candles that started it. Another supply zone. All right. You can label that. You get the gist. I'm not going to label another one. Supply zone. And then you can see we have another big push down right here. Let's label these first couple candles that started. Usually they'll move sideways before they make a big push. So you can see sideways push, a little bit of sideways push, somewhat sideways right here, and then push, a little bit of sideways, and then push. So anyways, we have another supply zone right here. And when we're taking a sell, all we're looking for is price to come right back in that area to sell it off again, because we know there's big money in the market to move price in that area. All right. So we're going to wait, and we are going to be on the 30-minute time frame. We're going to wait for price to come back to these areas like this right here. We waited for price to come back to this area, and then it sold off, targeting our lower low. And your stop loss will be above this right here. All right. And you want to target supply zones that have big fair value gaps. For example, this is a fair value gap, right? When so it's always the first candle that starts the move and then the third candle in line, right? If this wick right here, you see this wick? Or doesn't even have to form a wick. One can have a wick and one doesn't have to have a wick. But if they both have wicks, that's okay. So if this wick is not touching this wick, as in they're not meeting, like this one's not coming, this wick's not coming down, and this one's not coming, and they're not meeting where they would touch, that is a fair value gap in the market that has to be filled. If you guys want a video of me just explaining that, you can comment that down below. But that is a short explanation of what a fair value gap in the market is. Right here, as we can see, a wick from this first candle did not come down and touch this right here. And they did not meet in the middle anywhere, and they're not close. So we can see that price has to come back up and fill that gap in the market. And our job is just to wait and see when it will actually happen. So you can see price did come back and touch this area of the market. We chose this zone. We like this zone because of this huge fair value gap in the market. And there was a lot of momentum in these few candles that formed. A lot stronger than these. And this is a lot, this play gives a lot more confluence than these two. You could have took this one right here and you would have wrote it down. It would have made profit. And you can see right here, price did come back up and touch. And as you can see, price came all the way down. We're going to be targeting the area of support and demand for our take profits. So you can see we have a pretty strong, about right in there. And we can see price would have hit take profit easy. And you always want to put your stop loss, above the boxes. That would have gave us an easy, probably, 2.5, 3 to 1 risk to reward, which is a great play to take. Would have made a lot of money on that play. Then you want to wait. You want to wait. See a very strong trend in the market. As you can see, it's kind of consolidating. It's going up, but these are real retail traders that are moving. Then we have a really big push right here. But we are still not convinced because price is not coming down and going back up. We can see price come all the way down. There's not really much movement in the market here, so we're going to keep waiting. Keep waiting. And then, boom, we can see we're starting to make lower lows and lower highs again. We see a lot of momentum still going downwards right here. Right here, lower low, lower high, lower low, lower high. And then we just kept going lower low. So we're still in a bearish market here. So how do we play this? All right, so this is a supply zone, but it's not a strong one. So you can see there's still bullish candles in it, and it's a lot of wicks. This is a very, I keep clicking the wrong button. This is a very strong area of supply and demand. So you can see we're going to mark the box around the few candles that started the big push, and we're looking for a fair value gap. You can see the first candle right before the big motion happened does not touch wicks or anything. The wicks don't touch, and they're not even close. So there's a fair value gap. We know the price has to come back and touch. And what did it do? It came right back up. We took the trade right here, and we wrote it all the way back down to a support zone, which is right there, or your lower low, and you hit take profit for another 3 to 1 risk to reward. All right. So it's that simple, guys. We're just looking for a trending market, and we're looking to take advantage of the big buyers and big sellers in the market. All right. And it's literally the exact same way when taking buys. You're looking for a demand zone, which would be at the bottom. All right. See if I can find you guys a demand zone example. Back this out a little bit because this is up to date, so we don't have any. But you guys get the idea, right? Yeah, that's pretty much how it goes. If you got any questions, comment down below. I will go over real quick before I go over. I'll give you some few pointers when you actually want to hop in the trade. So you want to look for strong momentum candles in the opposite direction. So we can see right here, we are starting to make a 3-line strike, which is 3 candles in the same direction. It's a 3-line strike. No, I'm sorry. That's not a 3-line strike. This is a 3-line strike right here. We have 3 candles in one direction and then 1 candle that engulfs the candle in the opposite direction, letting us know that there's a 3-line strike right here. This is a good way to know, okay, the market might reverse soon, so you could do that. Or here's another easy way to do it. You can draw you up a simple trend line. Look at this. We have a little small trend going on right here. You can draw it from here. You wouldn't have made that much profit if you did it from right there, or you could have did it on the one right here. Just 3 touches in the market. You could have just waited for it to break, even retest it to give you more confluence, and then it dropped. So guys, it's really that simple. If you have any questions, comment down below, and thank you guys for watching this video.